Yeah, so that the second section I candidly kind of skipped over because it got way too much into the brain stuff and all that. Um, and the first and the third section kind of does a really good job of capturing what the second section kind of gets in. But yeah, so I figured this would be more of a Socratic method versus like me just talking at you the entire time of what I liked about the book. So I guess I will start with my takeaways and we can use that book club thread that I made in the Trading and Accountability channel just of my favorite passages. And if we want to start reading the passages and talking about what it means to you or light bulbs that go off, we can do that. Or if not, then we can
Yeah,
talk
no,
about
that
it.
sounds good.
All
That
right.
sounds good.
All right, cool. So, my biggest takeaway from the book is A, I likely have all the technical knowledge that I need to be successful in the market. The thing that is preventing me from going where I want to go, or just in general, going where traders want to go, is their mental psychology. Hence the reason why I did this book. The way you think about the markets, the things that you're thinking about, how you're feeling when you have a trade on, things like that. One of those is thinking in a series of trades rather than this specific trade. Because, in all honesty, once we put a trade on, we really have no idea what's going to happen. We have tools that can put probabilities in our favor, such as the tools here at GammaEdge that we offer, or if you're a chartist, certain kind of market structure, or if you like patterns, certain patterns that you see that repeat over and over again. But there's no reason why this specific trade has to work. And so kind of just getting comfortable with the uncomfortable feeling that once a trade is put on, it's kind of out of your control, and from there you just have to have the discipline to follow your system and your trading plan and executing like that.
Yeah, I agree. I think I read the other book, his other book, I guess first, and there's a lot of overlap. So
Yeah, I agree.
sometimes I think I conflate the two. One thing, one thing that helped me to make trading not so, I guess, exhaustive is, yeah, it's kind of a system of trades, right? And you're going to win 65% of them or 60%, right? Or even if you win only 40%, but your average winner is more than your average. All right. So rather than individually kind of think of the trade, I'm not constantly to make a decision to like, should I get out now? Should I, and that was always like way more exhausting to me because I was always afraid of losing profits or, letting a winner turn into a loser. Whereas it's just, hey, have a process and trust your process and trust that over 100 trades your process is going to be profitable. This book really, I think, really the other book and this book as well, I mean, they really help, I think, kind of, I don't know, just make it easier to where I'm not constantly thinking about whether to get in or get out, right?
Yeah, I mean, yeah, I think kind of what you're saying, or like at least for me, is it's like I can put comfort in knowing that I've put in the work over the years to have the technical knowledge. And he kind of talks about like your gut feeling, which people kind of knock on gut feeling, right? But like, I think it's a real thing because I mean, it's built over the years of you seeing something happen, and you kind of know, and that's where you trust your system to whatever happens, happens, and you have a system to um, help you be profitable, keep you out of trouble. So like this quote right here that I'm pulling up, I think kind of captures what we're talking about. So it's on page 203. It says, once you trust yourself to always do what needs to be done, there will be nothing to fear because the markets won't be able to do anything to you as a result of your inability to respond appropriately. With nothing to fear, you are free to observe the market, free of distortion. You will no longer avoid certain information because of how it makes you feel. This is allowing you to learn about the nature of the markets. The more you learn, the easier it will be to anticipate what the market may do next.
Yeah, absolutely. Um, and yeah, yeah, and kind of the whole idea of where he talks a lot about um, you got to get over being wrong, right? And I think that was like that was one of my biggest challenges was wasn't when I started trading, I kind of started as it was just kind of like a side hobby, right? So it it was more about like being wrong than losing money, and yeah, I mean, eventually you get tired of that, right? And it's you kind of have to change, and that was I think at least in the second to last section, where he was talking about you have to be open to change, right?
Yep.
To uh, to kind of make your inner environment match your outer environment, and so I and going back to something that you said, I read a lot. I'm not a big contributor in terms of posts to GammaEdge, but I do kind of follow what's going on. And, this is something that Michael, um, going back to kind of where you said gut feeling. I mean, I think intuition, which is a lot of what people call gut feeling, right? That's just subconsciously pattern matching, right? You've seen these patterns kind of play over and over. You kind of know the probabilities. You know what it looks like when it works. You know what it looks like when it immediately doesn't work, and so you get out. And one of the things that I guess that Michael would kind of always say, "Hey, keep it simple, keep it simple." And that's kind of like a relative term because with your experience, I think you have a really good intuition about, hey, the trade's going to work out or it's not going to work out, right? Because whereas for some of us, it is kind of a stressful thing in terms of like putting on the trade isn't so bad, right? It hits your level, right? And then that was your plan. I think it's the plan, and this book kind of helped more of the trading in the zone, but it helped more um, with saying, okay, what's the plan now that you're in the trade, right? What are the things that need to happen for you to stay in, or if it moves up, how do you move your stop up, right? And really for me, the whole thing about I guess the Mark Douglas books is, hey, don't be afraid to be wrong, right? Um, Mistakes aren't life ending, so don't treat them as that. They're opportunities for learning. It's actually, in a way, kind of changed the way I try to communicate mistakes to my kids, right? Like, because I don't want them to have, they play sports, and I don't want them to have kind of hang-ups of like, missing a shot or whatever it is, right? Uh, I think this book is actually, and that was one thing I kind of didn't like about the Disciplined Trader as much, right? Because it did get into all this brain energy, and I kind of liked the whole positive energy and negative energy aspect of it, but it kind of got really far. There was a section where it was like, and we're really getting into this whole brain thing. Like there's no with the whole energy thing not having any. I don't know, or memories and not having any mass and stuff like that. Anyways, but yeah, I mean, there's so many things that are applicable to outside of trading in the two books. Sorry, I'm kind of monopolizing the conversation. So you guys,
No, you're good. I mean, yeah, I mean, there's a lot of parallels between trading and life, right? And so, kind of going back to what you were saying about just mistakes and like not fearing them. I don't know. I think it's kind of like, I don't want to say like fake it till you make it, but like, I don't know. You kind of got to do some reverse psychology every day, like every day saying like, hey, today's the day. Why can't I have a great day today, right? And so, because so the third part of the book I'd really encourage you to read because I think he sums it up really well in his final note where he says that Trading is a simple feedback mechanism to tell you how much you like yourself in any given moment. You will give yourself an amount of money that directly corresponds with what you believe you deserve based on some value system you've acquired at some point in your life. To give yourself more money, you need to identify, change, or discharge anything in your mental environment that doesn't contribute to the highest degree of self-valuation that is possible. What's possible? Stay focused on what you need to learn, do the work that is necessary, and your belief in what is possible will naturally expand as a function of your willingness to adapt.
Yeah, I actually did get to that part. And yeah, I thought that was a great way to put it, right? It was something, about, the trader kind of pays himself, right? Or thinks, right? Because it's like your actions are kind of a sum total of your knowledge and of your kind of your belief in your system and the belief in your, I guess, mentality to execute your system, right? And if those things don't, and I know I'm kind of butchering what he said, but I thought that was a pretty good way to put it, right? And almost like a thing I need to remember, um, just to tell myself at the start of every morning. You know what I mean?
Yeah, I mean
Um,
that's a great. I mean, I've felt it a million times. I'm sure you have, and everyone listening to this is the part about, it's based off your self-worth. Like when you're good, when you're on a roll, like you're seeing the market clearly, you're just seeing trade opportunities left and right, or you're saying, nope, that's not going to work. Yep, this is going to work, then it hits. But I mean, when you're losing money in a drawdown, you're just super pessimistic, and all you see is just failures, right? And so, right there's just a microcosm of how important your psychology is. And then he had
yeah,
another. Oh, go ahead.
no, and I mean, just kind of putting in, as long as you don't let emotion or fear kind of take control, right? When you're in that, I guess, kind of that drawdown,
Yeah.
um, right? Like, because what I would do in the past, I would just kind of, uh, I would retreat for a while, and then I'd be like, well, shoot, I got to make it, I got to catch up for the month, so I got to go bigger, and you're wrong on that first one that you go bigger to kind of catch up on, right? And then now
Yeah.
it's like, it's worse, and so I don't know, just you got to keep taking your shots, right, within your system, and the only way to, if it's like basketball, there's no such thing as like a 10-point shot, right? Like just just keep going for the easy layups when you see the opportunity, even if you miss the last five, right? Because that's the only way to get back to even is, over time you'll make more of the layups than you miss.
That's a
Um,
brilliant metaphor. That is a
Thanks.
brilliant metaphor. I like that a lot.
Repeat the metaphor.
Um,
Using the basketball analogy, right? There's no 10-point shot. So the way you dig yourself out of the hole, I'm paraphrasing, but the way you dig yourself out of the hole, which is what he says, it's the consistency, right? Once
Yeah.
you cut your losses, and once you can get back in the saddle and you have the psychology of confidence, you just keep doing the same thing and you'll get out of the hole. You don't have to oversize to make up, which is what I think Monsieur Blonde was talking about.
yeah, that's
Yeah.
what I would originally try to do. I would try to go for that 10-point shot that just, right, it's a figment of at least my imagination because it would never really work out. It worked out one time, right? And maybe that was
Yeah.
even worse because I think the next time I went for a 15-point shot, right? And you just can't do that, right? You just got to keep taking the shots that are, that match the environment that you're playing in, right? And we kind of create our environment, even though a lot of it's kind of, the market forces, right? We kind of own our system within that environment, and that's kind of all we can control is how we, right? And if mine is, shooting 10-foot jumpers that have a high probability of having an expected value, then I got to keep shooting them. And I can only expect 2 points out of them, right? If that's
Yeah.
kind of how my system is.
And something I would say too that is very detrimental, and you hit on it, is thinking you have to make something back. Like there's nothing to make back because what's happened in the past is the past, and you can't go back and rewrite it or do anything. All you can do is focus on the present and the future and make the best decisions you can, right? Like the market is just one perpetual thing in motion. Or that's kind of how
Right.
I look at it. We assign start and stops by the days, by the weeks, or we can assign start and stops by when you choose to participate in the market and when you choose not to participate in the market. And so yeah, really revenge trading is a massive thing, right? Like yeah,
Oh
not
yeah.
wanting to be wrong and feeling like the market took something from you and you need to go get it back. And when you feel like you're going to go get it back, you're going to overtrade, you're going to go on tilt, you're going to size up. Next thing you know, you have no account left to trade with.
Yeah. The other thing I would say is so we've been in a bear market drawdown since January 22 till 23, right? So most people have been losing money, absolutely losing money. I mean, you could probably look across FinTwit. There's some people that have been doing okay and winning, but most people have been losing money. So they're at the point now when the next uptrend starts, they're in no psychological or capital or emotional capital position to take advantage of the next uptrend. When that continues, we don't know. We have the tools here, I believe, to help us understand when that is, but they've been beaten down so much from January 22 till, let's say, I don't know, March, April, May now, and we might be starting a new uptrend. So now they're not in a position to take advantage of this, right? And most people have had drawdowns. My P&L has been up a little bit, down a little bit. I mean, really just been chopping around. I've been treading water probably the past 3, 4 months, maybe, making a little here, making a little there, gaining a little, but the opportunities have been tough back and forth just because of the market environment. We may be in a changing market environment since the beginning of June. P&Ls went from lower left to upper right for June for me, which tells me that there's a change in character in the market. So kind of like what you said is you have to keep taking your shots, understand what environment you're in, and then when those next long term, if that is your strategy and plan, opportunities present themselves, then you take advantage of those instead of just being very pessimistic about it and not ready to take advantage of that. So I think we may be getting to that point though in the market where we might be starting maybe a new longer term uptrend. So yeah, it's going to be interesting to see. So your sports analogy, I love it because I play golf all the time, and in golf you have to learn how to miss. Basically, it's where you miss. It's not where you actually hit the ball. If you can miss the least amount and missed in the best spots, then you're going to be a decent golfer. And a lot of times you have to miss to actually make a par on a hole. Like you have to put it in a spot for you to be able to make a par. So, and that's kind of what I do with trading. Yeah, I manage my risk, but I know that I want to put myself in a position that if I miss on this one, it's going to be the least amount of drawdown for my overbar portfolio and emotional capital and everything else. So anyway.
Yeah, so I got
Yeah. No,
two
I
things
think.
there. I'm gonna go real quick. Mr. Blonde's
Yeah. Go ahead.
going. So, Michael, to your golf analogy, I think what's really good, a good way to put it is like there's some holes where you have to accept before you even play the hole that par is a great score. Birdie is just, you should not even be going for a birdie on that hole because more times than not, you're going to end up with a bogey, double bogey, rather than just accepting. Not hit a driver, hit a 4 iron off of it, set yourself up, and then get your par, run out of there like a bandit on the next hole where's a birdie opportunity, right? And so, kind of, I guess, connecting that back to this book, there's a great quote that he says, by making the execution of losing trades an automatic function of your trading strategy, you make yourself psychologically available to take advantage of the next opportunity, even if that opportunity is in the same direction of the losing trade you just got out of. So yeah, Mr. Blanco,
Yeah.
go
No, I
ahead.
was just gonna say the golf analogy was great too. One thing I'll add, a kind of anecdotal to it. It never impacts me because I only ever play, where I'm up. I win the hole. I'm up one. Right. We don't. But if you're playing like lowest score, one hole can like totally screw up your day, right? Um, so anyway, so you can't just go on tilt for that one hole and make it back, right? I mean, it's kind of the same thing in trading, but yeah, and I think yeah, I do think 22 made people so hesitant for 23 that now they're chasing almost, right? And they chase because they were scared, and things that were um, things that were. I eventually started getting back in once kind of the SVB stuff, and now I trade. I mostly trade like the big mega cap ones, Microsoft and Apple and Nvidia and stuff like that. So it's been kind of good for me all year so far. But um, yeah, I mean, I got smoked. I got smoked on December 13th. The CPI, it kind of printed lower than expectations, and then I don't know. We kind of reversed, and then we had about 2 or 3 weeks there where things went bad. Um, and yeah, so I kind of went away from my process that I had, and so I missed some of January and February, which was pretty good runs for Microsoft and Apple and stuff like that. Anyways, uh, but no, and I think just kind of I think those kind of little tidbits that you're taking away, those little excerpts that like Taylor's been reading and stuff, just things like that to kind of remind yourself, or I'll use. I'll kind of remind those parts, kind of in the morning, or even if I'm in if I'm in a shorter term trade, um, like, hey, I've had to accept this risk, um, treat it as it's almost gone, right? Like, so like, I don't feel like I'm losing anything to stay in the trade, right? I've defined my risk, and that's it, right? I set my stop loss or whatever, and if it works out for me, it works out.
Yeah, I think so. This for me is where two or multiple accounts come into play for me. And I know everybody can't do this and doesn't understand it, but like my long term account is up, significantly since the November, December lows, right? I mean, because I've used ETFs and stuff. So, hey, Taylor, your mic's still hot.
Oh, my bad.
Oh, you're good. Um, so my long-term and intermediate account is doing extremely well, right? Because I've been long some leverage ETFs and stuff. But my actually day trading account, what I use for day trading, I've really just been treading water back and forth, a little bit. So having another account that I'm watching go up significantly takes a lot of pressure off my day trading, or what I call day trading. I call it 1 to 3 day account. So I don't know. It's just psychological for me, because I'm like, hey, this other account I've made whatever 32% or whatever 50% since the beginning of the year, right? And I'm like, that's great, right? And then my day trading account, I'm like, I'm just treading water. But I'm still like, well, this is not so bad, right? I've been in the right positions and doing the right things with this intermediate to long term account. So I don't know. It's just how I look at it and how I play a lot of times. And I probably shouldn't combine all this together, but it takes a lot of pressure off my shorter term account, because I'm like, okay, I'm not having to use my short term account to trade for alpha. I have alpha in other places. So
That's the hardest thing though too, is this is probably the hardest thing for any person, I would venture to guess, is not getting focused on money, right? Like focusing on your system, on your execution, on your psychology, and having faith that over the long run you will make money. And if you don't make money over the long run, well, then you need to reassess and go back to the technical knowledge or something, because something's not right. But most of the times, you're not making money because you're messing up your execution somehow. You're not letting the trade play out. Kind of stems back to psychology and fear of some kind of FOMO you're getting, or fear of leaving money on the table. Those four different types of fears that he talks about. Yeah. Another thing I wanted to hit on too is that we've kind of something I struggle with is thinking the market like owes you something because you've put so much work in, right? And like you put in nightly prep, you show up and you feel like, okay, I gotta put a trade on today because I turned my computer on. I'm sitting in front of the screen from 9:30 Eastern time to maybe the close, maybe whenever you decide to get off, and it's like, all right, I gotta have some action on, right? And that's detrimental to everyone. I think having that mindset as well. I know it is for me because you're forcing something that really isn't there. You're just constructing something in your mind because you feel like you got to put something on the trade. And at the end of the day, the market doesn't care about any of that. All the market does is it rewards execution, nothing else.
Yeah, and I think that kind of goes back to uh, kind of that quote where you get what you deserve, right? Or the trader rewards themselves with kind of like the sum of their knowledge and their system and their kind of how they how they execute it both mentally and by clicking the right buttons, right? Kind of that statement. Because if it's not one of those days and you don't see your high expected value opportunities arise, like your system should say, don't. If you were sticking to your system and you trusted yourself to stick to your system, right? You wouldn't take those trades. You know what I mean? You wouldn't force it. Like forcing it is kind of a um, I don't. It's kind of like a breakdown of your system, and that's like one of the things that I kind of like to do the trend stuff. But like if it's a choppy day, then I'll say, okay, hey, today's a day I should probably sell some premium. But then I'm always like, don't short a boring market or whatever, right? And anyway, so I end up not doing nothing on some of those days, right? And it is boring. Um, but I guess that I kind of use the time. I'll do a lot of kind of look at charm charts and stuff like that to kind of plan for later in the week or something when that happens.
Yeah, having distractions and whatever when the market isn't conducive to your strategy, I think is important. And so, kind of
Right.
going back to what you were saying, like there's several paradoxes in the market, right? One of which is you're expected to be very disciplined when the market offers you ultimate freedom to do whatever you want. Like you're your own boss. You have no one telling you what you need to do. You're and really
Right.
no one to hold you accountable except yourself, or if you choose to have an accountability partner or something, which I sounds like a great idea. I'd like to have one. But yeah, and then I want to come back to this quote too. Just I guess try to connect everything to a quote or whatever. I got a million of them. I might as well try and use them. But this one, so this is page 65. This is one of the first ones that struck me was in the market environment, you have to one, make rules of the game, and two, have the discipline to abide by those rules, even though the market moves in ways that will constantly tempt you into believing you don't have to follow your rules this time. This movement allows you to indulge in any illusion or distortions that suit you in any given moment. Certainly, you wouldn't choose to feel pain, i.e., confronting your illusion about the market, if there is a reasonable information that would support the possibility of your expectations being fulfilled. So, yeah, I think that just kind of rounds out what we were talking about there. And then again, why choose pain over the possibility of being made whole when all you need to do is ignore the risk? I think that's a pretty funny quote too.
Yeah. Yeah. There was another. Yeah. I don't know. I kind of lost my train of thought. Maybe I'll. If it comes back.
Yeah, no
It was
worries.
something. It was something from the book that I kind of found that was really helpful. Um, what other quotes did you?
Yeah, I was gonna rattle. I was gonna go kind of on to the next topic or just something that
Yeah. That's
we feel, but yeah. So one is, um, so I mean, this is a great quote too. That I'll just read it first. Is the market doesn't create the way in which you perceive it. It merely reflects what's going on inside of you at any given moment. Which I think this is like maybe the most important quote in the entire book. Is the market is literally how you perceive it. And that's fundamentally what the market is two people with opposing views on the market transacting at an agreed upon price, right? And so, Michael, kind of coming back to what you said earlier, how you were saying we've been in like a pronounced bear market drawdown for whatever. And then I guess with this quote, you could say that's your interpretation is we're in a bear market drawdown. Someone else could say, I don't know, the market is what it is, and that's just a lot of opportunity, right? And so kind of supporting what you were saying is people are so mentally exhausted and psychologically damaged from this drawdown because they're rigid and they've not had the intellectual flexibility to um, see the market for what it is, right? And they'd rather be right than to make money. And so they just have not allowed themselves to make money on the short side or accept that they're wrong and part with their long positions and wait for it. That's probably the bigger one is not accepting that they're wrong and parting with their positions. And they'd rather just wear the drawdown, not look at it, blame someone else other than themselves, blame the market, they will blame they for taking their money rather than having the responsibility and really maturity to accept I took the trade on, I've not taken the trade off, and everything that's happened between now and then is 100% on me.
Yeah, a lot of people don't do that. It's amazing. Not to, bring Reddit into this or, Theta Gang and all that. There's always a lot of blame that it's somebody else, that the market is rigged or whatever. And I think that ownership thing that you're talking about is absolutely key. Own it, correct it, and be at ease with it, right?
Yeah, like
Yeah.
that happened to me a couple weeks ago. Um, I had a trade on, and it was like there's some 2 o'clock news event that I just had no idea about. I didn't check Forex Factory that day, and I got smoked. And I was like, that damn news, like, what the heck? Like, it's totally screwed me. And I was like, and then I was like, no, that's my fault because I didn't check the news. I didn't mark my chart at 2 o'clock like I normally do, indicating that there's a news event. So like, I just wear it. So yeah.
Yeah, I kind of when I see quotes like that, either they haven't read this book or they don't put it into practice, right? Because you'll see even like stuff that's like just so incorrect, like oh these market makers are just pushing them, they're stop hunting, and it's like dude that's not what market makers do, right? You know what I mean? And so one, it's like their their beliefs are not consistent with the outer environment, right? Kind of going back to how he talks about how their outer environment is. And like to think that they're going after you and maybe your 100 share, size position, like they don't care about that, right? Like, I mean, anyways, I kind of always smirk when I see that sort of thing. Like, oh, market makers are just they're running all the stops on purpose. And anyways, and they're
Well,
trying to
that's
get everybody shake everyone out so they can buy it all lower.
yeah. Well, that's where that herd mentality comes in, that crowdsourcing, investing, and all that stuff. Right now, granted, on AMC and GameStop, right when all of that stuff was going on, I mean, that was just total herd mentality and happening, and everybody was just pounding the certain things. But the psychology of it, it's just all these people that made all this money in crypto, right? I mean, we can go. I mean, there's a dime a dozen of guys that made just tons of money in crypto and have lost it all back plus more, right? I mean, just because nobody understood how they made it and then how to keep it, right? It was just that flash in the pan type deal, and not leading to this, but he had multiple examples in that book of guys that were way up and then way down, right? And then like just pretty much losing their minds almost to the point where like they were, I mean, not going to go off the deep end, but going off the deep end, right? Because were way up and then they held on to something and it just went all the way back down. And, we see that multiple times. And it's just that roller coaster ride of back and forth and then blaming that it's the market, right? Or somebody said something, or it's politics or whatever, and never accepting responsibility for your trading, I think is, the hardest part. So,
Yeah. Even if market makers, quote unquote market makers, or stop hunting or whatever that even means, like, okay, that's what they're doing. So either figure out how to make money from it or don't partake. But complaining about it isn't going to do anything either. It's just going to take money from your account.
well, you have to adapt to, right? Everybody's blaming the zero DTE options, right, for the intraday move at 230, right? That we continue to see at roughly 2:30 ish, I mean, we start to see moves happen in both directions. We see at 10:30 or 11 o'clock or whatever, 11:30 when the euro closes, depending on what time of year it is, right? At 10 o'clock, opening range, right? The book's clear and we see things move. But what happens at 10 o'clock most of the times? There's some news release, right? I mean, so like all this stuff correlates to certain times of the day in the market. And, everybody's like, oh, it was against me and blah, blah, blah. I'm like, well, you probably shouldn't have been trading at 10 o'clock when the CPI was going to come out. You probably shouldn't have had a trade on. You should have waited for the directionality. But anyway,
Yeah.
that's beyond what we're talking about. But yeah, so
Yeah.
it's just
Yeah,
accepting responsibility for your trading. I mean, so.
but even the book, it kind of does talk about that, right? Like the environment does change, right? And it's zero DTE, especially once, I mean, a lot's changed since I guess we went to every day, what, about a year ago, a little over a year ago. And even that's evolved, right? I think maybe sometime around, I don't know, November or something like that, then you kind of saw these new or like different strategies come out, right? But that, if your environment change, you have to be willing. That was kind of the part of the book that I finished or was finished or got to was kind of, you have to be open to, changing yourself, even if the environment's static, right? To get better, to learn more or whatever, to get closer to what you think is perfect. Or you need to, if the environment itself is shifting, and we've seen a huge shift. And I mean, I think our edge is that we can kind of see it, right? We have the tools to have a better picture of what that looks like. And I mean, it's kind of like, kind of like my dad complaining about how the world moved to computers and things were simpler before. I mean, it's like, well, this is the world now,
Exactly.
like you got to adapt.
Yep.
Yeah, I mean, not to talk about our tools anymore because we're talking about Mark Douglas, but I think the vision that we're getting from the development of these tools at the levels, with the Vol-D command and the charm charts and knowing what these levels are at the start of the day. I mean, it's amazing to me, right? Because I'm an old school trader, like I said, like we were talking this morning. I was IBD, blah blah blah. But the vision you can get from this, I think, is really changing how people are doing things, at least on our side, and market structure and market environment for the day. And then having the vision on out like we do for the week and all expiries, and knowing what those massive liquidity levels are. I personally have changed how I trade, at least knowing that I have some liquidity levels below me that are more than likely going to provide areas where price is going to be supportive. So it gives me greater confidence to be long versus those levels. And then if those levels get taken out, these large, we're talking 36 billion liquidity net delta, right? 400,000 contracts. If those levels get taken out, then I know there's significant forces at play. But if those levels continue to hold, then I continue to be long. It's just like this IWM thing. I mean, 170 was just this massive level for weeks to months, and it was a great level to be long against. And you knew exactly when you were wrong. If we started going below 170, the sentiment had changed. So anyway, I think our tools are just really developing and evolving. That's going to be pretty amazing. So
Yeah, I think they help. I mean, kind of tying it back to the book, right? If you kind of have a system based off the tools and knowledge and, trust of the tools, right? It kind of plays into the, trust your process, trust that you'll execute it correctly. And then, you know, take your higher expected value type, shots. And going back to, if you do that 1,000 times, you'll probably be profitable in the long run.
Yeah, you have to have technical knowledge of what you're doing, right? Like, I mean, there is something to say. I think Trading in the Zone, he says something along the lines of, like, take someone with rock solid trading psychology, and they're more likely to be profitable than someone with great technical ability but no psychology. And so, Michael, to your point, like, you've taken the time, you've adapted these tools, you've understood how to use them. Like, our tools may not be for everyone. Some people may think that we're just full of absolute crap, right? And that's fine. But then there's a lot of other people that including ourselves here today and that are on the Discord every day, that have taken the effort and the time and figured out how they use these tools in their systems and have come to believe and trust these tools as part of their system. And then from there, it's just having the mental flexibility and whatnot to um, execute on your trading plan. And so, and yeah, that's like I got in a spirited debate, I'll call it that, with someone a couple weeks ago because they were just saying that we were gung ho bullish all the time, and I was like, look, man, it's what the tools were saying. I am not bullish. I am not bearish. We operate in if then statements. If this happens, then this should happen. Operating in probabilities, right? The tools are saying one thing. So like we're not just gonna say something else for the sake of being different, right? Like we trust the tools, these are what they're saying. They kept us out of trouble this long. We're not gonna abandon it just because the market's been up however many days in a row. It could go up another day. Or it may not. I don't know. But that's the point of being trading in probabilities. We've been right, whatever, 7 days. If we're wrong the eighth day, whatever. It should be a paper cut. That one day of being wrong should not negate all the positive work that you've done for the past 1 day, 1 week, 1 month, whatever it is. So
Yeah, June 7th, I posted that last night. June 7th, we had the market model flip, and we had 9 days up, and it was what it was, right? And then the CT failed a little bit. The market model flipped down. We had multiple day pullback. The CT turned back on. I mean, on the day it turned back on the whatever 27th, and then we've had these days up. So like, if you really just followed that CT process, you would have been on the right side of the market. I mean, like just a simple CT, and we back tested that, right? And we know that. But again, it's this process, right? It's understanding the tools, and it's not the key word that you keep saying, Taylor, is fear. Not having fear and just executing and knowing that you're not going to destroy yourself because you can manage your risk. So if you have that, then you have nothing to fear. So I think that if you can remove that of knowing that you're not going to blow up your account because you're going to trust your stop loss and trust your process, then it removes a lot of the barriers to trading. So
yeah. And going back to the CT thing, like that's technical, right? But then it's having the mental flexibility to say, okay, I'm fine going long. I'm fine then stopping and going short and just going back and forth. And you may not. You may only be a long trader. Well, then you need to have the discipline that's saying, okay, when the CT is indicating that we are trending lower, I should not be trying to put on long trades here if my system tells me not to. So again, that's where you're just trying to bully the market, and the market is way bigger than any individual person, and you're not going to win that battle. So,
yeah, I
yeah,
mean, we've back tested the short, right? It's difficult to short sometimes, right? I mean, Paul's back tested this. We've thrown those back tests out. The short side of the market is a lot harder and a lot faster and a lot quicker and usually a lot shorter, right? I mean, and we know this. The overall drift of the market for the past 100 years is up. 75% of the time the market is up, right? And your bear markets usually last 20 to 30% on average. And and they are usually 12 to 18 months. Like, I mean, we can have a sustained bear market, but 99% of the time the market is going to go sideways or drift up, right? And it's not us being bullish all the time. It's just what the market does on the most probable time frames. So
yeah. But to counter
Yeah,
that,
and
I
I
will
think
say that there's some people that make great livings that short in a bull market. But the thing about them that separates them from every other person is they are probably rock solid in their system and in their mental psychology of saying, I know exactly what I must do to be profitable fighting this trend. And if I don't do that, I'm going to blow up. And so they are so just rock solid in what they do. And that really just comes back to everything we've talked about today. You just need to be so committed to what you're doing and not let anything get in the way of that. Because you got to think about it. Your trading psychology, if your life's a balance sheet, your trading psychology should be a major asset, the biggest asset on your balance sheet, aside from your trading capital. Then you have your psychology, right? And your psychology is either an asset or a liability, and that's gonna flip your balance sheet. I don't want to get into it, accounting stuff, but
no,
yeah,
yeah. I mean, I kind of just, I don't know. I mean, I think there's three things is kind of what I've been, you know, at least what I got out of the books is, it's psychology is, a third, I guess risk management's a third, and then your technical knowledge is a third, right? Like you can, I mean, I mean, you could probably make a lot of money just taking like 50-50 bets with good stop losses on COTMP. Like just kind
Yeah.
of keep it as simple as that, right? Like set an alert for when that happens, you know, see if watch it for a little bit and then place your bet. And as long as, you win 1.5, your reward's 1.5 and your risk is, I mean, even if your reward's 1.1 and your risk is 1, I mean, you're gonna win over time, right?
Yeah.
Um,
All right, guys. So we're coming up on an hour. What I wanted to do is I wanted to finish off by going through Mr. Blonde, coming back to what you were talking about before, how you tell yourself kind of to start the session or end a trade. In
yeah.
this channel, I've posted, so it's 8 affirmations I tell myself every morning before I start trading or when I'm in a trade that just kind of help me get in the right mindset where basically everything could be going to hell or everything could be well, but just reading these gets me back in the mind frame and the mindset shift that I need to be in. So I'm just gonna rattle through these and we can stop and talk through each one, or if it doesn't do
Okay.
anything for you, then we'll just keep moving on until we're done. Sound good?
Sounds good.
All right, so in I don't think there's any particular order. I could probably put these in a better order that kind of, flows better, but whatever. We'll just go with it and from there we'll go. So the first one is I have all the technical knowledge needed to be a successful trader. Why not me? Why not today? So that just tells me, okay, I know everything that I need to know. Now it's just down to execution.
Yeah, and I think this is kind of what I thought about, right? Like where he talks about maybe this is what exactly was, but why not me? Is kind of that where he talks about limiting beliefs.
Yep.
Like even if you kind of know the things and stuff like that, you're like, well, why can't I make a lot, or why couldn't I do this full time, or why, and if you do have all the technical knowledge to be a successful trader, then why couldn't you just do it full time? You know what I mean?
Yeah.
Like,
And not only that, but it's yeah, so that's one side of it is yeah, why can't it be you? Exactly. Like you see all these traders uh, apparently successful traders on Twitter or whatever you do. Why can't you be one of those guys, right? There's no reason why you can't be. But on the flip side is you don't need to keep searching. You don't need to read another book. You don't need to go spend an entire Sunday pouring through charts hoping you find something else, right? Like most of the time, you're not going to find it. What you need to find is something that's between your ears. So that's something that's really helped me because I was so guilty of just pouring through so many charts, searching for something that I missed when really I didn't miss anything. It was just in my mind.
yeah, no, I totally agree. And even like all those things that you kind of did do search for, right? Like they just kind of put more decisions that you have to make to enter or exit a trade,
Yeah.
right? So if they take you from 50.1% probability of winning to 50.2, it's probably not worth it, right? Because you're like missing out on, right? Because you're just missing out on stuff because you got too much stuff going on in your head, right? Because like, and I think I think he said it in the other book. What traders will always do is like, oh, what happened? Why was I wrong? And they go and they seek out more information, right? At some point, you just have to say, hey, I've got enough knowledge about things, still being open to the idea that things change like zero DTE, right? Um, but yeah,
Yep. I agree. So second one is it's all right for anything to happen because I am confident in my ability to respond appropriately to what does happen. So again,
yeah,
what that kind of means to me is I put on the trade. Once I put on the trade on, I have no idea what's going to happen, but I'm confident that whatever does happen, it is what it is. It's not going to destroy me. It's not going to make me. It just is what it is.
yeah. And I mean, that's just trusting yourself, right? And
Yep.
and having a plan, right? And I have to set stops, right? Because like I know that sometimes I'll talk myself out of it, right? I just have to set the stop and honor the stop.
Yeah, so that brings up a good point on so in trading in the zone, another paradox of the market is traders are desperate to win, but in order to win, you have to participate. But you will only participate if you think you're right. And then using a stop loss contradicts that thinking because if you think you're right, then why would you use a stop loss? So that's pretty funny. So, all right, moving on. Number 3, the market is a reflection of my psychology. I create the game in my mind based off my beliefs, my intents, my perceptions, and my rules. I choose to attach any meaning to any particular move that the market makes. So again, with that, I think the key thing there is you choose to make any particular move in the market meaningful.
Yeah, and he talks about this in Disciplined Trader, right? Like it's you can only kind of perceive things you know about, um, and you have right, and so you avoid the like you can avoid like the things that cause fear, right? And so you'll ignore signals that are telling you to get out, right? Because your fear of being wrong is kind of blocking those signals a little bit. I probably kind of butchered what he
No, I
said, but
mean
that's
you're spot on because what I was going to get to is sub bullet points of this affirmation is just reminders that hey, in a winning trade,
yeah,
the fear of losing will cause us only to focus on information that the market is going to take profits away from us, compelling us to cut it short. And then in a losing trade, we will only focus our attention on anything other than that which would indicate the trade is a loser. How 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 true is that? That happens
yeah,
so many times.
absolutely.
Yeah. So yeah, that was a good one. This next one, I'll just rattle a few of these off real quick. Then we can release yourself from the notion that the next trade has the potential to fulfill all your dreams. Right? Like that next trade is not going to make you a gazillionaire, right? Like trading should be a very methodical process that over time should make you money. Going boom or bust is a tough way to live. But yeah, people on FinTwit may make hundreds of thousands of dollars on one trade. But the thing is, they have years and years and years of practice, and their psychology is very good, system very good, and they've worked to achieve that. I have not. I'm not at the level yet to expect to make $100,000 on a trade, and it's foolish for me to think I should be making $100,000 on a trade. So you just need to understand where you're at and set reasonable expectations.
Yeah,
Next,
I almost
oh,
think you
go
have
ahead.
to be an idiot to. I mean, unless you're like throwing big money, you know what I mean, or you're kind of like Warren Buffett and just kind of sitting there forever. You got to kind of be to make a life changing trade, right? I mean, you basically had to YOLO in, and you're one of the knuckleheads on Reddit in a way. You know what I mean?
Well, I mean,
Um,
I think it's all relative. Like, for instance, you could put on a trade, or like I follow another guy, and for instance, like a standard trade is he would buy, say, $25,000 worth of premium in Tesla call options. And there's nothing wrong with the trade. For him, that's just a regular trade based off his account size, and he hits I don't know, multiple 100% winner, and bam, that's a big trade. But that's not unusual, or that's not excessive risk. That's just where he is at in his trading journey. That's just a regular trade to him
oh
versus,
yeah, but that's just a percentage based off his
yeah,
portfolio size, though.
yeah,
Then yeah,
exactly.
I got you.
It's all relative, right? And so, yeah, getting the P&L off your screen, like that's super helpful too, I think. So, the next trade has nothing to, the last trade has nothing to do with the next trade. Leave the past in the past. We've talked about that. This next quote was like, this had me laughing because it was so true. And we kind of hit on this earlier, but it says, they won't take my money. Only a misguided me will take my money. And then the quote is, I know the evil I'm about to do, but my irrational self is stronger than my resolution. How funny is that?
I like that.
Yeah,
Yeah.
That's
yeah.
good.
That's hilarious. There's so many
I've been
times
there.
where I'm entering a trade and
Yeah.
I go, God, this is a terrible idea, but I just feel like I need to do it anyways. I need some action.
Or even, I mean, that's kind of the. Um, I mean, I know I've been there where it's like, man, I know I shouldn't do it, but I got to do it, right? Like I got to make up. I got to get back to green for the
Yep.
day or the week or whatever, and I'll just
Yep.
do something stupid. And I know it's stupid. I haven't done that in
Exactly.
a while, but like, I mean, yeah,
Yep. 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 I mean, it's really just delayed gratification, right? Like today's society, we get almost anything we want. And so just having the thinking down the line, like thinking about P&L on a week basis, on a month basis, on a year basis, rather than on a daily basis, I think is powerful because it leads you not to tempt yourself into doing stupid things. Another one, I'm free to change my mind at any time. Yes, that goes right with accepting things for what they are. Um, I am trading my process and my system. Money is not a concern. It will come through consistent execution. We've hit on that. Um, I control my destiny, not the market. The market doesn't care about my destiny, but may present opportunities today to help in the advancement of my destiny. I like that one. It's okay not to trade today. No A plus setups will lead to poor outcomes in the long run and take me further away from my destiny. Accept the risk at trade entry or don't place the trade. I have permission to be wrong. It's only a failure if I don't learn something from it. Taking losses is an automatic feature of my trading system.
yeah. I think that I have the permission to be wrong, and it's only a failure. I mean, for me, that was, I guess, that was kind of it kind of shifted the way I looked at being wrong, which was helpful.
Yeah, and there's a great quote in the book that affirmation kind of stems from, which it's on page 205. It says, "When you start trading from the perspective that mistakes don't exist, you will be amazed at the sense of freedom you will feel to grow by accepting your results as a reflection of who you are in the moment, which then allows you to determine what you need to learn to do better. When you release the energy out of the belief that it's possible to miss anything, you will no longer feel compelled to do something like getting into a trade too early or too late." So again, that's kind of back to that faking it till you're making it thing, like saying things in your mind like, hey, that's not a mistake, that's just a learning opportunity, and where I am at in my journey right now, I didn't know what just happened may have happened, but now I know and I can apply that to my trading going forward.
Yeah, this comes back to win rate also. I mean, most people do not know their statistics of their trading plans, and that your fake it to make it, I think, leans to this because a lot of people are just pressing buttons and placing trades, and they have no idea what their stats are. Like, my normal thing is between 30 and 40%. That's usually when I'm doing good, but I actually got up to high as 60 or 70% like the past, I don't know, a few weeks ago. And I looked back and I'm like, why am I at 67%? Well, yeah, because I was only making like 2, 3, 4% on every trade because I was just cutting it really quickly because of the market environment we're in. And I was trading zero DT too. So, and I was like, wait a second, this is not what I do. Right. And I've actually cut down my zero DT like way down. And I went back to doing leverage ETFs these past few weeks because I wasn't wanting to sit here a little bit. And it just, so you have to know your trading plan and your stats and understand where you're at. So
Yeah. Yeah, I should have prefaced this saying this conversation kind of assumes that you're like you put the work in and you have an idea of what you're doing in the market, right? And so there's things I learn every day. I was like, oh, I really that's a mistake. It's never happened before. Let's try not to let it happen again. So, and just knowing that, hey, I don't know everything. If I did know everything, then I would be on a beach somewhere retired, right? So there's things that I still need
Yeah,
to learn.
and it's like new mistakes are good, right? I mean, as long as you don't blow up,
Dude, that's the great
right?
thing about the
And
market, or the thing I love is like you're always learning something new, right? Like
yeah,
that's what's amazing about it. Like
and
even
even
GammaEdge, like GammaEdge. I mean, 3 years ago, none of us even knew what the Gamma stuff was, and then GammaEdge itself has evolved over time, and we focused on zero DT stuff and just the new tools that are being developed every day from things we think of, things that you guys think of, and John being able to create it and Paul checking it and all that stuff, like it's just amazing. And where we're going to be at a year from now, 2 years from now, we may laugh on back today and be like, can you believe we were doing that stuff then and now we're doing this? Like that's exciting.
Oh yeah, it's changed a lot in I guess the year that I've been a member. Um, but one thing too that I wanted to say on just because you have a loser, it's not necessarily a mistake, right? It's just you know you're gonna lose around half the time. I mean, you're gonna be wrong about half the time. That's okay, right? As long as your risk rewards, as long as your expected values, right? It's not not equating every loser with a mistake. I think has been a mind change for me too.
Yeah, and a losing trade is not a mistake. It's a function of a trading system. It's the cost of doing business. Like GammaEdge, we're not just on 100% profits, right? Like we have to pay money to
Right?
people to perform the service. That's the same thing as trading. You have to, in order to think in a series of trades, you got to take every opportunity that you see. And some opportunities are not going to work, right? And so, and thinking that you should have a 100% win rate is foolish. And kind of coming back to that, another thing that is funny in is ironic, I think. I think ironic is the right word. Is a lot of professions, whatever you do, a lawyer, a doctor, um, accounting, anything, takes you years and years to understand it. Or Paul, it takes you years and years to understand the energy stuff that you're doing. And for people to come to the markets and expect that on day one they should be profitable is like is laughable, right? Like it's going to take you years to get to that point. And so just accepting that it's going to take a lot of time and it's not going to be any um, instant hits is something that you need to come to grips with as well.
Yeah, absolutely.
Yeah, and then the last one, I like this one. It just says the market is never wrong. It's a never-ending and perpetual. And sorry, I'm restarting that. The market is never wrong. It's never ending and perpetually in motion. It offers unlimited profits as well as losses. Time starts when I choose to participate and ends when I've had enough. There is no regard for any individual survival. So, yeah, that just kind of comes back to um I used to not be okay with like missing a day in the market or like not always looking at the market, like thinking I'm missing something, right? And so after reading this book, it really just enforced to me like the market is just never ending, right? It's always going to be there. It may or may not present an opportunity when I'm looking at the screen. Okay, but it's always going to be there. And yeah, I mean, it's okay to be away. And the market only starts in my mind when I'm looking at it. So, yep. And with that, I don't have anything else. Not sure if you guys have anything else, want to talk about anything else, but I think we kind of did a good job and did the book some justice with what we talked about.
What's our next one?
I don't know yet. I was gonna do Trading in the Zone, but I mean it's so similar to this book that um, I mean I highly encourage everyone to read Trading in the Zone. Like that's great, but I'll spend the weekend researching another book, or I'm open to suggestions on what you guys any good psychology. I'd like to keep it around trading psychology, or books that can be applied back to trading in a way or whatever. If it's like some David Goggins book or whatever, I have no idea, but I'm open to anything.
Yeah, I tend to agree with that, to keep it around the psychology. It's not that TA isn't relevant. I mean, TA is definitely going to always be relevant because the market follows TA, right? And that drives sentiment, that drives decision making, and all of that. But I do think the psychology is is a big deal. Um, Brent Steinbarger is a trading psychologist.
Yep.
He's really, I've followed him for years on his blogs. He's got some really good stuff. In fact, he's where I learned about the CT way back when. I, I think things like that. Alexander Elder is another one who not only has some TA, but he has a lot of psychology in there. So I'll take a look at some of the stuff I have too, and if I think something here is appropriate, I'll suggest it as a potential candidate.
Oh yeah, yeah, I mean there's a million people. There's that Jared Tendler guy's got a book. There's a guy named Geo something. He works with trade. He was like the in-house guy for SAC Capital. Steve Cohen's thing. He has a lot of great stuff too. So yeah, there's a million different stuff. But yeah, to your point, I don't want it to be like we're not. The point of this isn't to read like that options Bible or whatever and become great at dissecting option Greeks and theory and that stuff. It's really like he's and the quote Mark Douglas said is trading's 80% mental, 20% technical, and I think that's true. Once you get to the point where like you're proficient, you have a good system, then it's all down to mental. And so I really just want to focus in on that because by being part of GammaEdge and participating with us every day, you're going to get all the technical stuff that that you need. So
Yeah, I agree. I think the trading psychology books are probably better for this. And especially I think you don't really know that going in. I don't think, right?
well,
Like
that's the
you
thing. No
can,
one ever talks about it. All people talk about is just the next trading signal, the next Discord signal, the next chart pattern, cup and handle pattern, whatever. But at the behind it is that's what the chart is. It's just the psychology of the market. You can look at it
right.
as like a pattern or something, or you can look at it more fundamentally, just saying this is what the market thinks. Like that's what our tools show. They're showing psychology of the market too, just in the way that they're positioning and whatnot. So um,
Just out of curiosity, do you guys? I mean, you guys probably already have a lot of the psychology stuff down. Do y'all still get value out of kind of reading these books?
I do. Yeah. See, I wanted to avoid like
Absolutely.
yeah. I don't think you
Yeah.
can ever. I don't think you can ever go over it enough.
Okay.
Yeah. I think for me, there is no mastery of this topic because you're always offset by the next shiny object
Yep.
in confidence, and you have to push back on the shiny object syndrome. You have to push back on the lack of confidence. And I think you might get to a new stage in it, but I don't think you ever master it per se. In the market dynamics, I'm everyone listening. For me, borrowing other language here, the market rhymes, but it doesn't repeat, right? It, it's always slightly different, and that's where the confidence component comes in. So I don't think you ever will outgrow this ever. I don't know.
Yep.
That's my view.
I agree. I
All
mean,
right.
it comes back to that quote or that passage we read that at the end of the day, your trading is a result of your self worth and how you feel about yourself in that moment. So, yep. So, yeah, we will. I'll get some more books prepared and I'll put them in the list here. I mean, there's a ton of great YouTube videos. Like I'm a loser. I listen to Mark Douglas trading seminars when I'm working out or something. So maybe that's why my pumps aren't as good as they used to be. But yeah. So all right. Well,
Um,
oh, go ahead.
well, I was just, and I don't know, maybe it would be too hard because you always have people kind of in, missing some of them, but it might be easier to like section off like parts of the book. Um, because I kind of thought that's when you originally posted it. It was like we were going to meet like once a month and talk about like the first three chapters. Not to where it's like, hey, we talk about the whole book at once, sort of thing. You know what I mean? I don't know. It's a better format. That's kind of the normal book club format that I guess we do at work.
Yeah,
When
I
we kind
mean,
of
but these books aren't big, and like my thought is, if it's important to you, you can read one book in 1 month, and then we can discuss it.
Yeah, I just mean it's a lot to talk about in 1 hour. I guess I don't know, but
Oh yeah. Um, I just
like it just seems like
go
yeah. Go
ahead.
ahead.
I was gonna say I
No, no,
just
no.
think it's hard to talk about a couple chapters like once a month because like I'm already done with the book and on to the next book by then.
Yeah.
He's a
Okay. Yeah.
millennial. He's a millennial. That's the issue here. So
I mean, the book though, like any book you read, there's a handful of nuggets that you find in that book, and so like I don't think we need to go on every chapter because most chapters more or less kind of talk about the same thing, or you can get
Yeah, that's a good
concepts, and
point.
that's where that's where I just wrote down the key passages in the book that stuck with me is that those kind of encapsulate what the book's about, and each chapter may only have one or two nuggets that you really need to focus on.
All right. Yeah, that
Well,
makes sense.
yeah, well, I appreciate you hopping on with us. It's good to have
Yeah, I
a
enjoyed
back
the
and forth.
conversation.
Yeah, so we will yeah, we'll shoot again for July, and I won't do it at 9 a.m. Eastern time on a holiday weekend next time, and yeah, and we'll go from there. So you all have a great rest of your weekends, and we will talk later.
All right. Thanks,
Yeah,
y'all.
thanks for doing
Good
this.
weekend.
Yeah, thanks for doing this, guys. This was good.
Yep,
yeah,
yep.
yep.
All right, yeah, I'm gonna end the recording now.